And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report. It's the first day of June. Markets are open. Markets are moving. Oil is breaking out. There's a lot of things we've got to unpack, break down. We're going to take a look at all of the sectors as well and, break it all down with the coaches here at Tackle Trading. Welcome out to our show. If you're a veteran of the community and you're coming on in for the very first time here today, hashtag Team Tackle right in the chat. Let's get the conversation started as we always do and keep it active in there. I'll be watching it, monitoring it as we go throughout the show as well. Hopefully I can catch any questions and whatnot. If you are brand new to our channel, we do this show and other kinds of content. We got all kinds of different videos here at Tackle Trading on our YouTube channel. Make sure you click subscribe, click the bell, come back and join us on a daily basis to break down these markets one step at a time. Let's bring the coaches in here, each one at a time. Emily, you first. You're a guest here every Tuesday. How you doing today, Emily?
I'm doing good. It looks like it's a slow moving day kind of Tuesday, which is not too bad. So I'll take that over crazy volatility any day. So I'm doing good.
It's an extension of like 6 days in a row now, right? I mean, last Monday we had a nice little pop. We've been pushing up here near resistance. Doji, light range, little green, little red, little green, little red, whatever it is. Market price action is just kind of hovering up here where it is. And I know as a cash flow trader, Emily, you do not mind that at all, correct?
Not at all.
Yeah, no, I know you don't. And Mark, you come on in here next as well. How are you doing today here to start the month and start the week?
I'm trying to get in that rhythm, right? I'm very good at coming off weekends, but 3-day weekends, holiday weekends, it usually takes me a minute to get adjusted. It takes a minute to get adjusted, just into that rhythm and rhyme, right? You have your real life responsibilities, you got your work responsibilities, and then you got your trading. And, after a 3-day weekend, it can take a minute to get into that rhythm again.
Mm-hmm. Yeah, absolutely. No doubt about it. And any weekend, but a 3-day weekend, particularly coming back after those 3 days, and markets are going to be opening up. I like it when you get a light range day like today, Mark, because I don't want to come into some craziness, So this is a very proper way to start the week from my perspective.
Our algo gods that rule the markets took mercy on all of us to start the week. So.
They sure did. They sure did. Sure did. And then we got Coach Gino here as well, joining us for today's show. Gino, you let me know when you're there. I know you went out to get a coffee. Emily, I don't know if you know this about Gino, but he makes his own coffee. He roasts the beans, grinds them up. He makes this really amazingly delicious coffee down there in Southern California.
Yeah, we've shared many stories on coffee.
Yeah.
He makes some good coffee.
He's told me several of them as well. All right, we get Gino here in just a minute, but let's start with the markets themselves here. S&P 500. Emily, what are you seeing technically?
Technically, it's pretty much what it's been for the last couple of days, right? It's just kind of high basing here, just trying to get to that breakout session here after we've had these last few weeks of choppiness. Last week was just kind of like, a doji week, really. And here we are trying to test those all-time highs here. So really nothing until we see some price action and it trying to break that resistance level right there at 42.38.
Mark, what about you?
Well, and this is the big picture. We go on every Sunday night, and last night was Monday night. It's the first night before the trading starts for the week. We do our weekend prep class, and we talked about resistance, and you have these worries, and they're not fears, because if they were fears, we wouldn't have found support in the midst of such volatility so quick. The market's very, very resilient. Inflation and what's the Fed going to do, and Fed policy and valuation, and these worries that hang over the market. And when you have worries, and when everything isn't just 100%, there's a million inflation headlines a week, and what does that mean for the Fed? Listen, you're gonna respect resistance no matter what happens, but especially when you can identify things that are on the market's mind and you have a resistance level, it is not surprising at all that you hesitate at that resistance level. That is what is occurring. And even if you didn't know all that, let's say you lived in a bubble and were a pure technician, you see resistance, and that, from a technical perspective, that price can hesitate at resistance. That is just a common occurrence that if you trade for the next 20, 25 years, you're going to see it time and time and time and time again. And you should develop trading plans accordingly. So we're at a resistance level right now, hesitating, very normal price action.
Mm-hmm. Gino, let's get you in here next, and welcome out to our show here on a Tuesday. Gino, Team
Hey, Tim, how you doing?
Listening, we're doing great, man. And obviously Doji in here up at resistance at the start of a week after a 3-day weekend. How are you reading the price action here to start the month of June?
Well, looking back at the newsletter, and I was talking about seasonality last week. It was a typical May. It was choppy. I think we're going to continue that. We're trying to break out here. We got a few sectors holding us back. And usually June, we have a new highs. We have new highs hit here. I see the market trying to do that. I see, the S&P, it's only the first day of June. Day's not a couple hours old. And we'll get into the sectors, and I think that'll explain it deeper, the internals behind it. But looking at June, a little bit choppy, but we usually do very good. And I think we're going to have the typical June. I really do.
Let's go down to an intraday chart here. Break this one down from a multiple time frame perspective here, Emily, and give me a 30 or an hour. Either one of them would be just fine. A couple things happening here to start the session. I just want to point it out. You've got this meandering technical development over the last several sessions. You'll notice Monday, we had the big move up. Tuesday, chop. Wednesday, chop. Thursday, tried to push higher. Friday, held the highs. Over the weekend, we were coming in actually looking pretty strong. Ran up to that next level of resistance on the intraday. And Emily, if you'll back that out a little bit, you kind of see that historical price action back at 42.38 exactly, but we're still meandering up here. We did sell off on the cash open market. It was looking a little bit better, but that's natural. Resistance is resistance until it breaks out, right? I mean, those are real technical levels that people are paying attention to as we're meandering up here. Anything on the intraday price action, Mark, that's catching your attention?
No, I mean, I saw in the futures when the futures, I mean, they were doing nothing last night, and then, get a little bump, but then it's just like, I'm a big, huge theme guy, and I'm a big, huge sentiment guy. And, it's that, what is going to get the market excited? What's the catalyst to take that next dump? Because we all know the earnings were amazing. And that's helped, and I think provide a floor stability. I think one of the reasons the market got bought up so quickly and you didn't have a deeper pullback in the last couple of weeks is because of the backdrop of earnings. So the bulls have a big one in their in their pocket, and as long as those earnings remain constant and steady and good, I think it really does give confidence on dip buying. Now, that's one side of the equation, and when you look at it from the other side of the equation, what's going to get the market excited? What's going to take it to the next high? Because everybody recognizes high valuations that are in the market right now. I can't remember if it was JP Morgan or Goldman Sachs. One of them came out with a report this weekend and said, listen, we recognize there's high valuation, and I'm paraphrasing, obviously, but we see those high valuations staying through 2024. Now, obviously, guesswork on their part, but it just goes to show that everybody recognizes the high valuations that are out there in the market. So to take that next leg up, what's going to excite? And on the calendar right now, and so when you get a little, when you come up to a technical level of resistance and then sell off intraday, not surprising at all. Not surprising at all. And when you look at what could excite the market moving forward, well, we got 100 million Fed speeches this week, but you got Daddy Powell, going to speak on Friday in conjunction with the release of the monthly unemployment report. Now, that could serve as a catalyst in either direction. Maybe it's a terrible report and Powell says, hey, Fed money free forever. We're going to keep flooding the system. That could provide a spark. The others could play too. I mean, it's a big day on Friday from a macro sentiment catalyst perspective. But the market really needs a catalyst, something to excite it in the face of high valuations right now.
Mark, obviously getting something to excite it here when you do have a lack of news headlines, you never know when that's going to come out. Could be stimulus sometime throughout the week. I know that there's been, some communication, between the White House and Republicans moving that thing forward. Even the White House over the last weekend did say that we want some progress. One of those soft deadlines by like June 7th. But I'm starting to see more chatter around stimulus than I have in a while. Leave the politics aside because I don't care about it at all right now. But just focus on the market implication of it. Do you think stimulus could provide some of that spark?
I worry that stimulus at this point could provide a negative spark, with inflationary worries being the central theme. And when you analyze what's going on from financial media, sentiment, headlines of that, I mean, there are 9 inflation headlines for anything else. And I worry that, not for a major sell-off or anything like that, but it could, like, more stimulus in the face of inflationary numbers that would force the Fed. I worry that stimulus would have a negative effect this time.
So
I really, and I've thought about this a lot.
Mhm.
And I really do think that might be good for the economy, might good be for the pocketbooks. I'm not talking from that perspective. I'm talking from a market perspective, which is, anybody that's been around knows that the market and the economy are two separate things. They are not, they are not attached. And I worry from a market perspective that more stimulus floods the economy, and then it triggers worries that that's going to force the Fed's hand. I think it could have a negative effect this time.
So unknown impact, and
Definitely unknown.
Absolutely unknown.
Definitely unknown.
Yeah,
But
absolutely.
it's not like a year ago when we're in the midst of a pandemic and stimulus was needed, both to provide help in the economy and assurance for market participants. The trough is very, very full of slop right now, and more stimulus, I think, could. I mean, that's my theory, at least.
One way or the other, we're going to start finding out more throughout the month. I think you're going to see more of those headlines popping up that potentially could drive a little bit of price action. So we'll see it as it's coming. Actually, it's not here on a Monday, though, as the markets are kind of just stalling. Go back to the daily chart if we can here. And Emily, flash through the Dow, the NASDAQ, and the Russell. Tell me what you're seeing relative strength and weakness.
The Dow and S&P are pretty much very similar. As you can see, the Dow is also trying to get to that resistance level there at 3,500. Kind of like another doji day, very similar to the S&P. It's above the moving averages, but we're facing this resistance level here at 3,500. NASDAQ, kind of like still the lagger out of everything, right? It hasn't even gotten to those high levels yet where everything else is kind of testing that resistance level. Here we are kind of high basing at this, 13,750 level here. We're looking to break this level here to get to that next level there at 1,400. So I would say that, the NASDAQ is kind of like, still trying to play catch up here, but still above the moving averages. It did recover from that, volatility there, but probably the slow moving one out of the three. And then the Russell is, still neutral, showing more strength today than the others actually, but still, still neutral overall for the Russell 2000.
Gino, what about you? What are you seeing in the indexes? Any of the internals that you track? What else on broad markets before we get into sectors?
Yeah, the Russell is definitely the outperformer today. It's leading. Just a real quick note, just in case you didn't know, but I've spoken about this before, that we need to break down the Russell 2000. It's amazing that two of the biggest market cap in there, even though they're all smart market cap, the two leaders are GME and AMC, and they are both up huge today. So when you get AMC up 20% and GME up 10%, it doesn't sound like much because there's 2,000 stocks in there, but their market cap dwarfs a lot of the other stocks that are in there. So I'm not looking too deep into that, but the Russell is the leader. And, on what's holding this market up, looking internally, when we get into the sectors, it is the small guys. When you get into the S&P, the small sectors, the small market cap. It's not the big market cap ones because they're actually holding the market down, but we'll get into that.
Yeah, we'll talk about that AMC stock news here in just a bit as well. They issued another $230 million worth of shares, and the stock is still up another 10% or whatever it was this morning. So we'll take a look at that and talk about that in a minute. But let's flash through the commodity market next. Stocks all kind of hesitating up near the high. The Russell outperforming today. Another note on the Russell, by the way, Gino, a lot of energy components in the Russell, and energy's having a really, really good day today. Let's start with the crude oil breakout, Mark. There was some news today, actually. OPEC confirmed previous plans that they had set place in May that they were going to have 2.1, 2.4, something like that, million barrels per day in terms of putting more supply on the market. They're issuing more supply, confirming a plan, and oil is still breaking out of its consolidation range it's been in for a while here, Mark. What's your read on oil?
All right, 2 weeks ago, we had three big red candles in a row. And then we had a green candle on Friday. And I talked about in the commodities report that weekend that I thought that was very telling. If you had read the headlines, which I do on oil, I'm an oil junkie. It is one of the true loves I have in analysis is, and I consider myself an expert in this area. If you'd have read the headlines, you'd have thought oil was down 40%. Oil plunging, huge. I mean, just these scare headlines. Do not believe anything you ever read in the financial media, the mainstream financial media. It is headline garbage, constantly designed to get clicks, get views, graphic headlines. But you would have thought, and in the face of that graphic 3-day sell-off, we had a green candle. And I talked about this on the commodity report, 8-9 days ago now, where I was like, I think this is very, very telling. Oil had an excuse to sell off. Not only did you have the sentiment scare in headlines, you were breaking intraday support levels. You were breaking short-term support levels. You had the technical conditions for a big sell-off. And then you pivoted. And I thought that was very telling. And you've seen strong price reaction since. Oil does well in an inflationary environment historically. The backdrop for the macros on oil, I've been talking about this for months and months and months. I have been a huge oil bull. Not, just because I love oil doesn't mean I'm always a bull on oil. Sometimes you're bearish, sometimes, but the backdrop was very bullish. And so I felt very, very confident in energy stocks, especially from a cash flow perspective this year. And it felt last Friday that something was, not last Friday, 2 Fridays ago, that something was brewing. You had strong price reaction. And then OPEC comes out the last 24 hours. And all they didn't do anything special. They just reaffirmed their gradual production. They've let it known that they're going to increase production, which is understandable, given a world economy that is opening up. And they just reaffirmed today that they were gradual. Nothing special, no earth-shattering news. It's just the sentiment there is strong. Now, can you take $70 on oil? Probably at some point. Can you take 75? Wouldn't be surprised to see that at some point this year. And then there's going to be a natural cap, and then production's really going to open up. And then you're going to see oil eventually. And that's the cycle. That's the cycle of oil. But we're still in that buildup part of the cycle. And eventually there's a take profit and, hey, we're no longer bulls, but we're in a buildup of the cycle. And you've taken a couple months off. You've taken a couple of months off. There's still room to run. And energy stocks still look good from a cash flow perspective, but we'll talk more about that here in a second.
Yeah, they sure do. In fact, there's many of the energy components that are looking really, really nice. There's potential breakouts here today. Gino, how are you reading this oil situation here? Obviously, this is one of the products that you track as well quite often. I know, Mark, this is one of your top products you watch for. And as prices go up, it's natural for OPEC to want to increase supply. They can sell their product for a higher price, make a little bit more money. Of course, it's natural. We're seeing strength in the face of that. Gino, what's your read here on oil?
So, yeah, Tim, first of all, when you said the word oil, I know you're going to like this when I tell you this, because I bring this up a lot, is what the heck is going on with the prices of gas in California, right? I mean, bro, I'm paying $4.60 a gallon. Okay, that's what I think about oil.
It's going to be $5 before you know, Gino.
Yeah. Okay, so
I saw a headline yesterday, Gino, that said, coming soon to California, $5 gasoline, and then everywhere else to follow.
Higher
gas prices.
I'm the only one complaining about it because people are on travel revenge right now from the COVID-19, right? They're like, I'm going to make up for it. I didn't spend a dime on gasoline last year, so this is nothing. So here's the thing is, it's like, wow. I mean, when you go, it takes $100 to fill up your car. You're going, how far do I really want to travel today?
This might affect your vacation planning.
Yeah.
How's that new Tesla that they're displaying this week looking to people now?
Exactly.
I want to speak to that for a second because my daughter, actually, my oldest daughter, she fills her car up with gas, and she's been complaining about prices lately. And all it's really done, Gino, is given me the opportunity to give her some economics lessons, because as demand for a product rises, the value of that product is also going to rise. Higher oil prices are very simple. People are going to have more consumption demand. It's really complex than that. Now, California might have some different animals there.
Oh, we got the most tax on oil.
Yeah.
No, but what Gino just said there, I mean, and I'm going to use this analysis in my Queen's Court pick, but it goes to like understanding price movement and getting ahead of things. And that's the thing about oil. That's been one of the bullish theses that I've had along. And it's not a rocket science. I don't like rocket science thesis that drive my investing. I want simple things that everyone can understand. If I have too complex of a theory, there's probably something wrong. But people, they have pent-up demand. It's real. It's genuine. Box office this weekend of movies did over $100 million, a post-pandemic high. People are going to get out there, and price is not going to be an issue, because as Gino said, those real life anecdotal stories I think are very telling, because I think they do have application in where we choose to invest. And people are not going to care about price. Eventually they will, right? Eventually they'll be like, but people want to go out and have fun. They want to have aspects of their life back. And that demand is going to show up at the gas pump and in oil, so just
it's funny because if you go to Costco, there's a line. I mean, the line gets longer as gas prices get higher, because Costco is one of the cheaper places for gas around here by far. I mean, it's like not even close, right? It's like 60-cent difference. But who wants to go wait in that line, right? So you see people turn their car off while they're in line because they don't want to burn gas while they're waiting for gas. And then when they get up there, come on, guys, don't just put in 3 gallons. If you wait that long in line, fill it up, right? But it's okay because you're moving down. Like watching this person put like 3 gallons in, because it's just like, $15-20. They're like, wow, yeah, I'll just do 3 gallons more.
And over the weekend, I saw some of the biggest lines in places that I've seen in a year. I saw parking lots full to an aspect that I haven't seen before in certain places. It's real.
Travel demand this weekend was really strong, even in the airports.
Get into, Tim,
and stuff.
That's what I want to get into. Is like you said, the economics of it is, when do you? Because I'm not complaining, because I drove like crap. Went down to Laguna Beach. I drove all over looking for parking. It didn't bother me, the price of gas. It didn't worry me, because I was having fun finally getting out, right? But where does it come to a point when you go, you know what? I don't want to buy oil. When does it come to a point when the public says, I can't afford it because this is very inflationary on my budget? When does it? So when you look at IYT, I'm just bringing this little industry sector up, the transportation sector, that's bullish. Transportation's bullish. When you look behind that, that's the airlines, FedEx, and, all the delivery, the freight and rail. A lot of those companies that use the oil product, as long as they're bullish and they're in demand, that's really what it's about, because it's still demand for that product. So as long as I see transportation bullish, Mark's right. There's still upside on oil.
Mm-hmm. Yeah. Well, transportation has been bullish. In fact, travel demand over the weekend, like I just noted, was extremely high. Airports, expressed they had a lot of full bookings and all that kind of stuff. People got out and they did travel. There's demand for a lot of different things, but as demand stays strong for something, prices continue to rise. So to answer your question, when will consumers say enough is enough? That's the beauty of economics. And that's why Mark loves commodities, because there's natural ebb and flow between supply and demand. Mm-hmm. As oil goes higher, eventually people will change their behavior. Maybe that's $75 a barrel. Maybe that's $100 a barrel. I have no idea. We do know historically, though, oil does come into some levels of resistance at higher levels. But for today, guys, none of that is in the conversation, because we just broke out.
Yeah.
We literally just broke out of a 2-month range. So trying to identify where that high point is going to be, we're going to watch it over the next month or so.
It's much higher. I mean, that's the thing you learn in the podcast today. We're going to do a podcast, and I'm going to be the central subject. Normally I'm in the background, and I'm going to have 10 tips to cash flow trading. And one of those tips is, listen, and it's something I've had to learn the hard way, is when you identify potential momentum, don't try to be the person that guesses when that momentum stops. Price can go much higher, and you can try to rationally, I think it will stop at 70. No, you don't have any idea how. Go look at AMC and GameStop. Go look at so many stocks. In the short term, do not try to guess how a powerful move can play. Don't try to guess. It can go much higher.
The markets are much smarter than I am. I'll tell you that. And trying to pinpoint where the high is on crude oil is not an exercise I'm going to do right now. I'm going to watch the trend develop.
And real quickly, Tim, I've been trading for many years. The hype the last 15 years has really been technology, communications, all these fast moving, high-tech, biotech type companies. But when I first started, tech was brand new in 1998, 99. That was the whole tech bubble. But do you know one of the biggest sectors to invest in and trade in was the oil companies? They were the big market cap guys. They were like the ones that moved the market. And now they're not, right? But if you look and you're a bottom fisher, there's not only good breakouts right now, but you got to back. Just a little quick note. If you're looking at your charts, you're looking at breakouts and setups on oil companies like ExxonMobil, Chevron, and stuff like that, ConocoPhillips, MPC, SLB, all those, especially SLB, my God. You see a trigger on that, make sure you back it out on a weekly to about 10 or 15 years. And you'll start to say, wow, I'm actually bottom fishing on some of these companies. It's not like these are new highs and it's, oh boy, it's overbought. They've been beaten down for many, many years. They've got good dividends. And so they're fun to play because both as an investor or a trader or a dividend looking, I love oil companies and they're huge, right? Mm-hmm. So I really enjoy looking, but definitely, and I talked about that in the newsletter, is get in the habit of look at the weekly and how far back, like 10 years, go back 10 years and say, wow, like we're really off our highs on some of these companies.
Mm-hmm. Yeah, it's a really good point. Even if you just bring up XLE here, Emily, Schlumberger is a good example of it, but the whole sector. Oil itself, the underlying raw commodity, is much higher on that weekly chart. Flash CL real quick, then back to XLE. If you can for the visual, I think it will kind of show this. The CL contract up at $67 a barrel is much, much more recovered from its pandemic lows visually, price-wise, percentage than that XLE and many of the components. And from a 20-year perspective, many of those energy companies have been off for a long time because of trends in the market for many, many reasons. But they've got some room to come back if oil can stay high. We'll talk sectors here in a minute. Let's flash through the rest of the commodities real quick. Just going through my process the way I always do, Emily. You know me, I'm a top-down analytical type. Gold here next, if we can. The GC contract hanging around up here at 1900 an ounce. I mean, it doesn't really want to do much, which is just fine. The trajectory on that trend is beautiful. We're riding the 9 EMA. It could even consolidate for another couple of weeks. I wouldn't really care as long as the trend stays intact from a pivot relationship. Mark, anything on gold?
No, it's beautiful. I mean, it's beautiful. Like, I mean, unless you are brand new and watching us for the first time, we've been all over this trend in gold over the last couple of months, and it's still got room. It wants 1950, and maybe more,
I'm seeing a phrase in the chat I've never seen, and as a dad, I
use
this a lot. Regretty spaghetti.
Regretty spaghetti. Yeah, that is funny, huh?
What does that mean?
I don't know. I think it's just like a rhyme.
Regretty spaghetti.
You regret something, so regretty.
Yeah. Regretty spaghetti.
Okay.
That's that kill. Yeah, that's funny.
That's clever. That's cute. By the way, while we're on metals, though, silver, I saw this early. I don't know if it held the gains through the day. I haven't looked at it since we started the show. Let's take a look at the SI contract. It was looking much juicier than gold was earlier, Mark, and actually it's given some of that back. Still battling with technical resistance, but I know a lot of people are watching silver here, Mark. Do you think silver is going to play some catch up and show some strength?
I don't care. I mean, I don't. I mean, it's been such a beautiful cash flow instrument for 8 months now, and to be honest, for years and years and years and years. I mean, silver is prone to bouts of overperformance and sideways. I mean, you go back the last 15 years, look at silver, you're going to see some very long sideways trends. It's constant over the years. It's a beautiful cash flow instrument, and can it explode past this resistance level and take another leg up? Sure. I've been a very big pro silver guy from a macro analysis standpoint over the last year. But resistance is resistance. You can have the most bullish theme you want, but at resistance, respect. And that's where I learned to take profits or maximize my cash flow with aggressive covered calls. And I rinse and repeat that formula on commodities over the decades. You'll be very happy with your results.
I got a picture just kind of made me think about this as well. I got a picture from one of my students that I have known for years, and she sent me a picture of her first silver coin purchases. And I thought that was just really cool, Emily, when people take the initiative to go out and do that kind of stuff. I love this long-term weekly chart, by the way, that the daily chart's got a lot of chop in it. It shows you the strength off the pandemic lows. And Mark, there are reversal characteristics in here. Whether it takes another leg to 35 or so, we'll have to wait and see on that. I don't need it to take a straight line up, but silver is looking healthy and kind of holding steady for sure. Yeah. Dollar real quick, Em. UUP fading lower. Not much going on there. There's some economic data today, by the way. Shocker of the day. PMI came in the strongest in 12 years. Okay. How many times have I said that in the last, 3 months? PMI was higher than this. Manufacturing showing this expansion. And even in the PMI data, Gino, the Institute for Supply Management, they showed that there were labor shortages and the supply chains are still being disrupted, but all of those purchasing managers are bullish on the future prospects of the economy. The dollar keep fading lower here, sitting on support. I don't see much to add to that one. The Bitcoin chart real quick, and then we'll get into sectors, Gino, here next. Bitcoin just kind of hanging around, guys. We've got a nasty chop down here between 30 and 40K. The pattern is blown up in many, many regards. It's patient until clarity is the message we've had for weeks and weeks and weeks and weeks. In fact, probably months now, as those charts have kind of turned over. Emily, what's your read on Bitcoin? Are you starting to see sentiment changing around it? Or are you hearing anecdotally in your life, people are like, what's going on? What's going on? Because I've heard a little of that chatter too.
No, not really. But for me, I mean, unless it either breaks, 30,000 or 40,000, it's a stay away. It's sitting. I think it's starting to create a new box. It got out of that first box, and maybe it's creating a new box here, and we just got to figure out where it's going to go. Is it going to break above or go below? So for me, it's kind of like wait and see. There's really nothing to play until it breaks out of either one of those.
Sure, I'm with you as well. I think that's exactly the right approach. All right, let's talk sectors. Coach Gino is here, and obviously one of the lead coaches over there at Tackle Trading, one of my good buddies for about 15, 16 years now, Gino. And I know that you are a big, big believer in top-down analysis, and you do a lot of our newsletters on the weekend. I mean, you go through your internal indicators, you look at sectors, you look at each component. Let's go through the sectors here today and kind of explain to us what you've been seeing. Let's talk about the rankings. I'll kind of give the sector the ranking. You give me the analysis. Okay.
Okay.
Let's start with the strength here. XLB, XLF, XLI. Let's just flash through all of them. Materials having a nice little day, up 1%. Flash to the XLF here real quick, if you can, Emily. All of these got a 10-yard marker rating relative to the S&P at 20. XLF looking like it wants to break out up here. Nice little day developing. Love the trend there. And then XLI. The reason I'm lumping them all together, Gino, they're all at the 10 and they're all extremely strong. Are you seeing anything here that, is shaking you off of that assessment?
No, we've been in the nice trend line there. I mean, you can see it there on the chart, that trend line. It's like the 20-day moving average. And it's just nice. Degree of angle. It's going up on a nice 45 degree for a long time. It hasn't had too much fluctuation compared to the market. It's been very steady. But what happens is, Tim, the reason we give it the highest rankings is not just because of this chart you're looking at here, but we look into the main players of the sector. We look at okay, guys, we're seeing a lot of setups and financials. This is not only is the sector overall bullish, there's a lot of stocks that make up in the sector here, but boy, we're finding a lot of good setups going into next week. So when you see stocks setting up with a swing low or a breakout or about to trigger, you start to go, okay, this is where the demand is. So that kind of influences us that not only is this a good trending sector, because they're all trending up, but which one looks like it has the most potential as far as candidates. So what's nice about the newsletter, Tim, you could literally, and this is one of the systems I teach with it, is, guys, follow strength if you're bullish, follow weakness if you're bearish. You go and you circle the top three. So like if I was just the average Joe learning to trade, I'd come in here and go, okay, XLB, XLF, XLI, those are my sectors. Even if I don't know what those mean, you scan within those sectors, which we built in there, and you're going to find some really good setups versus wasting time looking at, I don't know, something like communications or technology, which is really mixed. Yeah, they're bullish on the overall chart, but you're going to spend a lot of time looking at hundreds of setups that are just not ready to trigger. And then we also think about, since we have experience in those companies, you got Mark's background, my background, and fundamentals, all that kind of stuff, and the influences behind it, the interest rates. We put that sentiment in there too and go, you know what, based on what's happening with the sector rotation, the inflation numbers, this makes sense or it doesn't make sense, And yes, so these guys have been riding the storm of the bullishness here for a long time. I mean, financials has been pretty strong. It looks very strong and a lot of good setups there. And industrials, we did upgrade a little bit because it actually looks better than it did the previous week.
Mhm.
So yeah, those are the three guys there. No change there. And what's going to take it to change? We need to see it break down below a 20-day moving average. We need to see some internal news behind it. And then we also, once again, let me drill this in there. We take the time to look at the weekly chart. So sometimes on the daily chart, Tim, it won't look like the best setup, but it'll look phenomenal on the weekly. And a lot of these, like especially like industrials, is pushing against its high like a breakout because there's a nice swing low on the weekly last week. So that's why we upgraded it. Industrials had a nice week last week that confirmed it still got an uptrend going.
Absolutely. You know, those trends on those weeklies are definitely intact. Next two rated sectors we have here, Emily, staples. First, if you can, consumer staples, obviously, they're going to be ranked right in line with the market at the 20-yard marker. The XLP, yeah, just watching that. Actually kind of hesitating up here near the high. Obviously, difference in characteristics between the top three that we just talked about. Still in really good trends, but kind of just hesitating up there near a base. And if you look at XLV, though, this is an interesting one here today because it's the weakest sector here today.
Yes.
And, you know, it's obviously going to be coming back down and testing support. This is on the backs of some individual component weakness. Gino, I believe Johnson & Johnson had, you know, a court case that they're going to need to appeal about the asbestos or the baby powder or whatever it is. I know they got like 5 court cases over the last 10 years, Emily, that just continue to go on and on and on and on. But that was in the news headlines today. Johnson & Johnson off 2%. And Abbott Labs, actually, they issued downside guidance, a really big component in healthcare. It's down like 10%. Gino, this is a change in character here. Healthcare, obviously, it was holding a little bit better on Friday, but here we are on a Monday, and it's even weakening in front of us, isn't it?
Yeah. So when you look at individual news on companies, so here's the thing. This is why you look at the internals of the sector. Because first, when I saw healthcare down that big and I was looking for headlines, I'm like, okay, this is a big move for healthcare. It's down. Is it all the healthcare stocks or is it a couple of the key players, meaning the big market cap? And sure enough, right away, you know, Abbott Labs, their guidance. Now, why would that affect the whole sector? Because being 10% down, that's a huge move. And this isn't earnings. This is just guidance, right?
Mm-hmm.
So something like this, it's like, wait a minute. This is a big company. Why would it just be dumped like that just from one news headline? They got a dividend. They've got a huge market cap. It's one of the leaders in the space. Why would it be down so big? And then what you look at is, okay, since it is one of the bigger companies in the sector, it kind of gives you a heads up that this might carry over to the other companies. Like, oh, okay. If, you know, it's kind of like if Home Depot says sales are bad, yeah, it's not going to be out of the ordinary if Lowe's says it too, because they're the same pretty much business, right? They're in the same thing. So we got to look into the headlines and say, okay, could this be a company story, something they did, you know, a lawsuit or something they had to do, a merger, some kind of buyout, or is this based on supply and demand? And yes, it is going to carry over to the other sector. But looking at Tim, 10% is a big move. Also, Thermo Fisher, which does medical devices, it's life science tools and services, they're down about 5% too, and actually are starting to break a little support here. So yes, it did catch my attention. And of course, United Healthcare, which is a difference, that's healthcare. You know, we got equipment and supplies, tools and services. Now we have healthcare. That one's trying to test support too. So it's not just the same businesses. All these, most of the big ones are down in healthcare, which tells me to do this. See if there's a follow through tomorrow. That's all you have to do. One down day does not change the trend. Wait. Let me repeat that again. One day down does not change a trend. So yes, we have it on the 20-yard line. Yes, that's bullish. You got to give it a couple days to see if the whole sector is actually turning. Because sometimes, Tim, sometimes you'll see like these down 10%. It'll go up and fill the gap and the whole sector will be up tomorrow. It could be just a shakeout. Give it another day or two. If you're stopped out, you're stopped out. You know, no big deal. But it is a big thing. Now, when you say healthcare, Tim, to me, that is something I want to watch and keep on my radar, on my watch list when I go through. Because when I look at sectors, this is how I do it. I look at technology first. It's 26% of the S&P. Number 2 is healthcare. It's 13%. So it is the second biggest sector of the markets. So if it does turn bearish, it could have an impact on the market. Whereas when we get to energy is less than 3%.
Mm-hmm.
So even if energy is having a great day today, it really doesn't matter. It's not helping.
Drive the S&P index performance the same way as tech would. I got you for sure. And healthcare, by the way, if we were ranking that today, it would have a lower ranking because that candle is nasty, but one day isn't going to change it. We're going to wait for the whole week to play itself out. We'll look at it on Friday as well. The next batch of those sectors that are just right underneath these two are going to be energy, communications, real estate, and tech. And by the way, communications, let's flash through these real quick here, Emily. XLC got a little 5-yard upgrade to the 25-yard marker on continued development. Had a nice week last week, hanging out up at the high, looking for a breakout. Tech, the aforementioned 26% of the S&P, you were talking about, it got a 5-point upgrade as it's been developing nicely up here. It's got a little hesitation in there, Emily. If you zoom in, you'll notice these like 5 candles in a row. Same thing with the NASDAQ itself. They're just bouncing back and forth, but they are riding those moving averages. A little breakout at 140 would be in play on tech. Take a peek at XLRE. Gino, you had mentioned earlier that real estate actually was having a nice little day. It's actually been a really strong performer. We've got that parked at the 25-yard marker. It's a conservative type of area of the market, Gino. And then we'll get into energy in a minute. But just those 3, Gino, XLC, XLRE, or tech.
And the price movement on XLRE does not let you know what the small cap real estate is going insane lately.
It is
one of my little favorites, AHT, that I've promoted several times over the year. Just pull some of these up. It seems like the underbelly is having a party right now. Just insane price. Go look at WPG. It's just, small cap, some of these smaller companies. So I don't know what's triggering the avalanche exactly, other than sometimes, hey, price movement happens, especially when it's taken a break for a while. But there's money flowing into real estate lately.
Mm-hmm. Yeah, absolutely. Big cap, but the small caps under the underbelly, obviously showing a lot of strength. Some interesting charts there. Gino, the last one I want to talk about, actually a couple more I did want to talk about. We had already mentioned XLE. I want to finish the conversation there next if we can, because the energy sector, even though it's a small component of the S&P, it's one that I'm very excited about, Gino. With the crude oil breakout, it's popping here today and pushing towards that $55 breakout. Daily chart, weekly chart, intraday chart, all of them play a role here, Gino. But what are you watching here on this potential breakout in energy?
Well, the key players are all participating. They're all up pretty decent today. Schlumberger up 4.7% as we speak. ExxonMobil up almost 3%. Chevron almost 2%. Conoco 3%. EOG Resources up 4.8%. So when you look at most of the big players are doing real well. Now, speaking of energy, again, energy is only less than 3% of the market cap. So you're not going to see it actually moving the market. But like what I'm seeing today is the small caps and all the little sectors from real estate, energy, and those guys, they are holding the market up because, you got tech down, you got healthcare down. They're the big behemoths, and discretionary is not helping. But we have the little guys actually performing today. Like Mark said, there's a lot of underdogs that we don't look at a lot. A whole bunch of them are up, outnumbering a couple of big ones that are down. But yes, I see a lot of great plays there. In fact, when you look at the sector, XLE, you look at the whole, it's kind of a swing low, which tells you you're going to see a lot of swing lows and a lot of, I'm seeing a lot of triple tops in there. So if you go into our newsletter and just click on energy stocks, we got them all lined up for you. That's the ones that are optionable, shortable, heavy liquidity, and build up those ETF. You go in there, you can't go through the first 10 stocks without finding at least 4 or 5 good picks. So it really is a highlight of the week. Is energy starting the week off good? And that's really it, Tim. Will there be a follow through on energy tomorrow? I think there's a better follow through on energy tomorrow than there is a bounce on healthcare. But, you know, that's what it's about, is keep your eye on the weakness, which is healthcare this week, and focus on your favorite sectors, which is energy. And to play it safe, stick with the ones that are performing, that have been performing until they don't perform. You know, you play a trend until it stops, and that would be XLB, XLF, and XLI. So if you don't like volatility, stay away from healthcare. You know?
Sure, absolutely. Based on current capital.
And real quickly, Tim, I keep pounding this because I go through my routine every day, and I have my set things I look through: the market, the sectors. But what order do you look at the sectors? Well, you got to look at the important ones, the ones that you're actually focusing in on. And if you're not sure, look at the ones from the biggest market cap down, and think about the internals. You know, so one of my things when I look, I'm always looking at technology, and then, of course, you look at the next one: healthcare, discretionary, financials, communications. When I get to materials, yeah, I look at it if I'm playing it. But when I get to real estate, I don't play a lot of real estate. I don't play a lot of staples, the utilities. I just they're not a big market influencers either. I could do without them. But when I get to technology or anything, my daily routine is I got to look at the two behemoths, which is Apple and Microsoft. And real quickly, if you bring up a chart of Apple, this one's interesting today because this is technology, right? It is sitting on the moving average, and it's knocking on it again a third time, the 200. Now, not many stocks knocking on their 200-day moving average, are they? So this is a bearish setup here. And what's the saying? You said you like the Regretti spaghetti type sayings. Yeah, there's an old saying we used to talk about one of our trading classes is, when you hit support 2 or 3 times, it gets weak. It's like little pig, let me in. It's kind of like they keep knocking and knocking until it finally blows down, right? It's a big bad wolf. That was my friend Noah used to talk about that all the time. And yeah, Apple, you're hitting the 200-day a third time. What's going on, man? When are people going to step in, right? So this is on my list to look at first thing tomorrow. And Microsoft triggered a swing high on my my scanners this morning, and it texted me right away and said swing high trigger. And I'm like, oh, darn it, I really need you to hold that, because I thought the trend was reversing on Microsoft. I thought this trend was reversing up last week, but look how easily it gave it back. Those are the two big behemoths. And finally, exact same Amazon. This is a discretionary leader. It's sitting on that 200-day moving average too, Tim. So when I'm talking about these stocks, I'm not talking about them as plays. I'm talking about them as they influence my decision on the market.
Sure.
And Amazon is not a player either. It's giving me a swing high setup here. And what's going on there? Maybe oil prices, who knows? Because they're a big delivery company. But just on my routine, I'm keeping my eye on those, and I'll keep you updated through the week, of course. And they are very, very important to those sectors.
Fantastic. Thank you, Gino, for rounding out the sectors. By the way, Amazon, the component in discretionary. Discretionary actually caught a little bit of an upgrade back into bullish territory, but it's one of our lower ranked ones as we've been waiting for some leadership.
I was thinking there because it's almost like we have multiple markets within the markets over the last 6 months.
That's true.
Because, like Amazon, Apple, they did nothing for 8 months. And the underbelly exploded during stretches like that. Oil exploded. Value trades exploded. I think it's just really important to recognize the hot areas in the market. And I do think that for the first time in forever, Amazon and Microsoft, well, they absolutely influence tech. They don't affect the broad market like they once did.
Sure. All right, guys, that's Market Skyline. We're going to go into stock talk here next. Talk about a couple of different corporate items that have grabbed my attention today. It's a little bit of a light news day, so there's only a few of them. Then we're going to play another round of the Queen's Court. I got my head sewn back on, Emily. Let's see if I can keep it here today. I don't know. AMC.
How intact it is.
Yeah. AMC. Marky, what do you make of this?
Okay, this is my take on AMC, and it's something I've been saying for a few days now. So AMC is the Dogecoin of the stock market. It is not a real company. It exists, right? But as far as valuation, my valuation on AMC is like $1.50. People forget AMC was literally on the brink of bankruptcy, only through immense dilution of shares. Why did AMC become a cult favorite on Reddit? I don't know. I mean, I'm sure someone could analyze the history, but it did. I see people in video games saying AMC to the moon. I mean, this is the Dogecoin of the stock market, and Dogecoin can have some runs, right? Dogecoin can have some runs. AMC is going to have some runs. And when does it end? I don't know, but it's not a real stock. It just isn't. So, and I'm a huge fan of movie theaters. Like you've heard me talk about Cinemark forever. So there's just been too much dilution of shares.
Mm-hmm.
Yeah. like just too much dilution of shares.
You know, I just got a breaking headline here when you're talking about it, Mark. AMC now accepts cryptocurrency for tickets. And you can buy popcorn with Dogecoin. What's up with that?
Silly. AMC, by the way, the news is really interesting if you think about it. They're actually issuing shares here today, Gino, collecting about $230 million in proceeds. The hedge fund and firm that they sold them to already has sold those back to the market today.
Of course they have.
So Mudrick Capital, I just saw the headline come across the wire. Mudrick Capital bought the shares from AMC. They've already sold them on a profit, got rid of them. So nice trade, Mudrick Capital, on the momentum there. And there has been, some positive chatter around, theaters reopening. A Quiet Place Part 2. I didn't see Part 1, Emily. I don't even know the movie premise. I'm obviously not the target demographic for that movie, but it did a pretty fair amount of revenue.
Almost
over the
$60 million.
Yeah.
People are going to go to the movies. It has nothing to do with the movies. It literally has to do with valuation and the dilution. That's all. I mean, this is not a long-term investment in my humble opinion, just to sum it up.
Mm-hmm. Mm-hmm. Next one here, the Jets, Jets. No need to highlight one specific airline. You talked transportation earlier, Gino. Memorial Day weekend, people did travel, and the Transportation Security Administration, also known as TSA, said that there was about 2 million passengers during Memorial Day weekend per day. That was the highest level since the pandemic struck last March. Obviously, we're going to see travel demand pick up. Nice little, bit of news for those reopening plays. I don't see a trade here on Jets, Mark, yet. I still think that's early, but healthy development in a neutral trend, at least. What are you seeing there in the chart?
Listen, all of the reopening plays have been in similar patterns. Took a leg up post-vaccine, understandable. News back in November, and then strong move consolidation. Been wonderful cash flow instruments. And I think, that's where I'm still confident from a cash flow perspective. Directional opportunities will present themselves, but the real play is cash flow on reopening.
Yep, sure. And maybe
it's like, reopening, and sometimes you find things and you're like, I'm not going to gamble to make $2 when the $1 is really sure, right? And that's how I feel with cash flow and reopening.
Yeah, I'm with you. Very similar in that regard. A couple more. Canopy Growth, CGC. I've been watching the medical marijuana space for a while, obviously interested. What got me floated off Queen's Court last week. CGC actually came out and reported their earnings. They had a 38% jump in revenue for the quarter, but they missed some of those higher expectations. Stock was off about 3%. If you take a look at MJ here, though, I'm still very much interested in this space. Even though I got floated last week, a breakout at 2250 is still in play, in my opinion. So keep an eye on that one. And let's do one more. Ford Motor. All the chatter over the last year, Emily, in Ford has been around their electric vehicle production and movements into those areas and how they're increasing money for spending over the next 10 years and all that kind of stuff. Well, there's one market that's taken Ford up on it. In fact, in Norway, their EV sales were the highest for the very first month that they've ever seen, and higher than their traditional sales for their Mustang Mach-E. It was their top number one seller in Norway for the month, one of the first markets that they've really completely gone into in Europe. It's interesting. I think there's going to be demand for all these products, including that F-150, the Mustang, all those kind of things. So any interest in Ford here, Emily? $14 stock that does nice cover calls, volume breakout recently. It's up at a high, though.
Yeah, I've been playing naked puts below 11. You can see my lines drawn there. It's starting to get away from me, so I'm kind of wishing I own the shares now. But it's a cash flow play for me. Naked puts until I acquire it.
Good. I'm going to write that down for my Queen's Court pick. Hold on one second. No, I've got a different one. I got another one for you for Queen's Court.
See, Tim's evolving. He's no longer trying to directly suck up. He's trying to minimize his sucking up and deflect it and downplay it through humor. He's evolving. I gotta give him.
He's evolving. He's not. Yeah, he's not trying to be obvious about it.
There you go.
He's not trying to be obvious about it.
There you go. All right, let's get into the Queen's Court here next. And obviously that's the news here for a Tuesday. And we're starting out the week. Markets are where they are, hesitating up at the high, but there's always stocks out there to trade. There's always ideas to approach. There's always things you can be doing in the marketplace. And each week on Tuesday, the coaches at Tackle Trading, whoever's on the show, gets to present the Queen with one pick. And the Queen gets to decide whether or not it's good enough to remain alive for the next week based on the analysis, the setup, the interest, or if it's not quite there, off with their heads. Emily, you're up.
Well, since Gino, the last time he came in, he kind of came in the middle of it and I chopped his head off. I will let you guys go first so that he can kind of see how the game is played. So, Mark, I'll let you go first.
All right.
Gino heard his head could be chopped off and he left. Either he disconnected out of Zoom or
Gino's a very conservative trader. He's like, I do not like my risk reward.
He knows when to exit stage left. So
that's right.
Listen, I'm not afraid to gamble. All right. So here I go. You know how I like a theme, Emily.
Yep.
And I like to develop a thesis for the things I do. And if anyone's followed me over the last year, I'm very open in sharing, not the pick. I have zero interest in sharing picks with people. I love sharing a thesis. I love sharing it because for two reasons. One, from a selfish standpoint, it allows me to work it out and verbalize it and see any internal chinks in it. And then to get feedback to see if I can improve it, if there's something I'm missing. And two, when I share a thesis in my life, it's like my old sports betting. I never would share a game pick unless I was really confident. And so there's a whole process in sharing a thesis. Well, over the last 15 months, I've made no bones about it. I've loved reopening plays. I've loved the discount. The trends were ugly at times. If you went to MGM or restaurants or cruise ships or movie theaters, or the trends and charts were hideous. But the thesis behind it was obvious to me. It was like, as long as companies had the liquidity to survive the pandemic, eventually smart men and women would find a cure to the virus and life would return to normal. And then when it returned to normal, you would have a lot of pent-up demand. Money was flooding the system. And those areas of the market that were beat up we're at a tremendous discount, in my opinion. Shared that several times over the last 15 months and has pretty much played to textbook. Well, that thesis is not over yet. There's still legs to go. Now, we're deep into that story, right? And maybe in 6 months or 9 months, we'll write the chapter on that and it will be a historical anecdote, but we're not quite there yet. We're not at a full reopening. There's still some doubt, I guess, a little bit. But most importantly, there are stories on the chart to tell us. Because while I develop a thesis, and sometimes price is just so cheap, I don't care what the technicals are. There was one point, Emily, that MGM, you could get $50 at the height of it for a $3 naked put. I mean, can you believe that? $50 for a $3 naked put. And that kind of stuff was everywhere. Even deep into the few months as the market started to bottom out. Well, as price starts to climb and as price no longer becomes a no-brainer, I'm not so cavalier at blindly. There are prices that I'll just say, nope, I'm going to buy that at. I don't care what the technicals say. But as price starts to climb and there aren't as many deals out there, if I believe in a thesis, then I'm not going to do it blindly. I'm going to base it on technicals. And I'm going to wait on technical patterns. Well, the pick I have for you today fits both of these things I've talked about. Still a thesis I believe in, the reopening, with a leg up or two from a directional standpoint, but definitely from a cash flow stability standpoint. And we're starting to get some of my favorite technical signals. Multi-month breakouts clearing major moving averages on weekly charts. So the stock that fits both of this criteria is Carnival Cruise Lines. Could you give me CCL? All right, so CCL obviously fits the thesis. Needed people, epicenter stock, survival in doubt, tremendous cash flow stock over the last 15, literally A+ cash flow stock over the last 15 months. It's been an amazing cash flow stock, talked about it a lot. Well, you know, took a leg up post-November, little pullback, took another leg up. And if you could give me the weekly chart to smooth out some of the price action, well, we've taken several months off, all right? That's healthy after a leg up. It's healthy after strong price movement. If you see things parabolically going up week after week after week, eventually reality is going to catch up, or eventually it's going to take a break. That's what a lot of the pandemic stocks have done. A lot of the epicenter stocks have taken a break. Now, some of them, though, I mean, we just looked at jets. Some of the pandemic stocks are a little healthier than others. And Carnival and the cruise lines in general fit that bill. So we have a little bit of overperformance recently, but most importantly, we have a multi-month breakout. Now, if you don't have it on your chart, but I use a variety of moving averages that we don't teach or talk about a lot of tackle trading, but I use them because algorithms use them, and my extensive study on moving averages use them. One of them is the 100 weekly, which has been descending on the chart. And if you put the 100 weekly on the chart, you would see that there has been, and let's do that, you know, just for, because it plays a role in my analysis on the timing of things. Love the thesis, but we still got to pull the trigger, and I like to do that on technicals. Yeah.
I'll just change this into 100.
Yeah. And so what you saw, and when you examine the timing of the entry from an algorithmic standpoint, you saw that price came up, and it is very common for price to come up to a major moving average or come down and hesitate. If it's on the way down, find support, or if it's on the way up, get slapped down. And so what you had on the weekly chart is you had a major moving average acting as resistance along with a horizontal resistance level. You had rising moving averages along with a horizontal support. And this is now closed above it last week and confirmed upward price movement to start the week. So not only do you have a horizontal breakout of a multi-month consolidation pattern, which is all I need, to be honest, you got a little cherry on the top from an algorithmic standpoint on your timing of it with a break. And now you don't, if you look to the chart from a technical perspective, you got a whole lot of open error, right? So I love the theme. I think people are going to be coming back to cruise ships, just like they were coming back to movie theaters. I still think there are legs on cruise ships to go up. From a technical perspective, you got a whole lot of clear error. And you're starting the week with a nice technical signal of a multi-month consolidation breakout. Checks the boxes for me, but it is not up to me. I leave it up to your grace. I present you Carnival and the logic and technicals behind it.
I love how you're so passionate about your thesis, right? Like you just don't deviate from what your process is. And, the reopening thing, you've been talking about this since, God knows when. And, you've been hitting it on, hitting it. And I love that you go through and find stocks that, are fundamentally, sound, like, between AMC and what's the other one? Cinemark, right? Like you look at AMC and Cinemark, you prefer Cinemark over AMC, like, because you've gone through and done your studies. So I know for you to pick CCL over anything else.
And one of the things that I didn't mention, when I started at the pandemic and I started looking at reopening, I tried to identify which company had the best liquidity coming into the pandemic. In movie theaters it was Cinemark, in airlines it was Southwest, in cruise lines it was Carnival. Because one, it was about survivability, right? There was a real question whether companies would survive. But post-pandemic, who would be in the best shape from a fundamental perspective? So that's why Carnival has always been my cruise line of choice.
Yep. And I love that you even introduced something new. I don't even think I've ever used the 100-day moving average ever. But when you apply it and you look at it, because I was looking at the 200 going, okay, it's got, it's got, I think at the 200 was sitting at 40, but to see that it's now crossed the 100, it's above the 9 weekly. It's a pretty looking chart. I actually do not mind this at all. This is a very good pick. You survived this week, my friend.
Thank you, my grace. I live to serve.
All right.
This was an easy one.
Well, I'm hopefully got an easy one for you as well. Last week.
Hey, listen, I died with Palantir last week, which I still love. I was going to come with an A+ analyst today, So.
If you had come with AMC today, I don't even think I would have.
I don't trade Dogecoin.
Hopefully, I will come with strong analysis as well. Let's see if I can live another round of the Queen's Court here. Give me American Express if you can. We're talking sectors here today, and obviously AXP.
Oh, I'm sorry.
No. I would never correct the Queen unless I have to. I have to get this analysis in there to hopefully keep my head. But no, American Express, obviously we're talking sectors today. Financials are one of the strongest sectors in the market. They fit so many of the themes that are happening with reopening and all of those types of stuff that we've been talking about for 7 months now post-election. People that use credit cards out there when they're spending and traveling and all that kind of stuff, it does create extra demand for American Express users. There's no question about that. Start with the analysis on XLF with its potential breakout as well, because there's a little bit there that I want to throw in here as to why I like, American Express. Number one, XLF, yes, testing a breakout today. Yes, looking gorgeous. Not quite as good, in my personal opinion, as American Express. If you look at the AXP potential breakout within financials, within credit services, there's a lot of really good components, but American Express is holding its gains for today on its breakout, even though it's on a very light doji. It was also a pick from the weekend options report. How do I know that? I was there and we talked about it in detail, and it was one of our favorite setups. So I know technically sound, coaches approved, all that kind of stuff from a short-term pricing perspective. I want to give you some fundamental and performance metrics as well, though, Emily. If you give me a 20-year chart on AXP, and I talked to my good friend, my dear friend, Coach Keith King, the Godfather, many, many times about these companies. American Express was always one of his top holdings as a 40-year investor in the market. Why? Because look at those trends when markets are good. Yeah, it suffers from market cycles like everybody else. 2008, we had the correction. Mid part of the decade, it went into a downtrend for a year or two. But watch how it just fires off and goes into multi-year trends. From 2009 to 2015, it had a 6-year trend. From 2016 to 2020, before the pandemic, it had a 4.5, almost 5-year trend. Here we are coming off on pandemic lows, breaking into new highs. And guess what? Forward PE ratio on AXP, 17. PEG ratio on AXP, which takes the PE ratio and divides the forecasted growth on reopening, 1.19, which, by the way, Coach Emily, is the lowest PEG ratio amongst all credit service companies over $10 billion in market cap. It's got technical leadership. In my opinion, it's got fundamental leadership, even through the pandemic, guys. I mean, their sales got hit last year, no question about it, but now they're starting to issue upward guidance. They're starting to see increasing sales numbers quarter over quarter. I love AXP here. I think it's fired off those lows, just like the financial sector has. It's one of the top leaders in financials. It's my pick for Queen's Court this week.
Another brilliant, easy pick. I mean, you guys are learning. Last week, I don't know why you guys went off ledge last week. It's just
every once in a while you want to gamble,
You don't gamble with the Queen, though. You can gamble with your buddies, but don't gamble with the Queen. I also think you guys must have paid off somebody to get into the Queen's computer to see what she's trading this week, because I actually have playing both AXP and CCL. So really? Somebody's getting some inside information on what the Queen is looking at. Either that or you're paying attention. So, but great picks. I love AXP. It's probably, I think I even had this a while ago on Trade Masters, and I still got my head chopped off, but that's okay. But yeah, I love the breakout, significant whole number at 160, more potential to run after, consolidating here for a week, just trying to break out of that 160 level. So absolutely love AXP for a directional play. And the great thing about, such stocks that you can play them in so many different ways if you want to go directional. If you want to go cash flow, you have a lot of choices to pick from here.
Absolutely. Absolutely. Now, I don't know if that was Gino, Coach Gino popping back in here, sliding into our halftime report back. He had to bounce there for a minute. Gino, you there, my friend? We'll get him for final thoughts in a minute. We'll save him from having his head chopped off. He saw the court open. He's like, I'm out of here. And then he saw the court close. Like, okay, it's safe. We can come back. All right. No, but that's it for Queen's Court here today. Obviously, we were going to come with the heat here today, Emily, after getting our heads chopped off. You had to learn your lesson a little bit. You don't have to take the hard trades all the time.
No, not all the time.
I'm back, guys. I couldn't get my microphone turned on. Sorry about that.
No problems, buddy. Welcome back.
Want to hear what I got or not?
Yeah, sure. If you got a pick.
Oh, do you?
Yeah.
Oh, okay. I'll throw one in there. I like to swing low on Dogecoin. No, I'm joking.
Cut his mic off.
No, actually, I got an interesting one because I was doing this last week, and if the queen likes it, I like it. So I'll let her decide if I. Tell me what you think of this. I'll present it as best as I can. One of my favorite cover call and cash flow plays in the last few months has been a company called FCX, which is Freeport-McMoRan, leader in rare minerals, copper. It's been on a nice run, great returns. I did start to go, wow, I should have bought more of these shares. It's been a good, you start going at your lead players for the year. And I said, let's go find another one of those. So through a little research, I came across a company called Trox, T-R-O-X, Tronox Holdings. Can you type that, T-R-O-X? So the U.S.-China trade tiff has impacted several industries. One such industry is the rare earth element industry. So nothing like, nobody really jumps out at this, but not a real exciting one, but these are rare earth is one of the crucial elements that makes up a majority of like electrical appliances, like smartphones, display panels, speakers, televisions, and stuff like that. So it's a weird elements of like lithium and weird things, neodymium, these little minerals we never hear of because we hear of silver and gold, but the ones I cannot pronounce, we're like, okay, do I really want to invest in those, right? But they're using this more and more. So these rare earth minerals, from my research, China is the only country that holds about 70% of the world's known rare earth reserves. So it's the dominator of the market. But now under the new administration, the Department of Energy has planned to make rare earth metals a priority among the domestic supply chain. So rare earth minerals elements are crucial to the administration's climate and technology policies and so on, electric vehicle production, and me, griping about oil prices, I could see that. Batteries, there's always a fight for a longer battery. So anyway, these companies, there's not that many of them. So Trox, along with FCX and a few others, looking at the fundamentals of this thing, its PE is sick. Its price to earnings, I think it was 3 last time I checked, right? A 3 price to earnings, 3.7. Now, when you see a low PE like that, you go, wait a minute, is something wrong? When you look at the growth of the company, they're expected to grow at 50-something+% every year for the next 5 years. So they got a lot of sales and revenue coming in, and it's a very high demand product. So it's a big focus. So looking at it, this stock has come off of a base of $8 a year ago, and it's now at 24. And Tim was talking about something called a PEG, which is something I look at. Anything under 1 is considered good. Look at the PEG on this. It's not only under 1, it's 0.07. It's one of the lowest PEs I've ever seen on a company with increasing sales. So to a fundamental trader, it's a diamond in the rough. And it's also in basic materials, which is one of our favorite sectors. And looking at it, it's cheap enough where for cash flow, it might be replacing my FCX for a covered call. Looking at the covered calls, it does not have weeklies, but I can make 2.5%, 17 days out, 5% a month out, basically getting over $1 on a $24 stock. Looking at 45 days out, you might like this. I present this to the queen. The naked puts at 19 and 20, which would be making the fundamentals the best in the entire stock market if it went down there. I see upside on this thing, 230 in the next 2 months, and that's a low estimate. So just looking at this as a cash flow, diversifying my portfolio, getting away from the high flyers, focusing on the smaller caps like Mark was talking about earlier. This fits the bill and checks the box for me on everything I just talked about. So I present that to you.
Okay, well, this is actually not a bad one also. And the thing I like about, about
I'm
trading,
sorry. I forgot to tell you, it's also a tackle play. It's on our list.
I absolutely love it because when stocks start to run up, and you've been doing naked puts, on stocks, and then they start to get to that 50 price range, 60, 70, and then it gets too far high up and you can't do naked puts anymore. It's always good to kind of start to build another watch list of similar stocks, right? That you can still do naked puts and, and collect that cash flow and premium. So this is a very nice comparison, or an alternative to people who've been trading F6 and kind of feel like if it's gotten a little far away from you and you still want to remain in that, inexpensive $20, $30 range. This is not a bad one. So I absolutely love it. It's got enough, options and premium that you can actually go a little bit out. Even though it doesn't have weeklies, it's perfectly fine. It's got, some volume in these here. Bid and ask spread is 10 cents. It's not the greatest, but I can still play with that. So I don't mind that at all. And it's also, like you said, a good cash flow trade as well. Dividend yield of 1.31. So that's not bad if you just want to acquire it right away, or if you want to do the naked put. Either way is fine for me. I like where it's sitting at here at resistance, kind of broke out of there today. So that's good. I like it. It's good. Good for me. Good for the queen. You survive. You will not get your head chopped off.
You must have had a
this time.
really good Memorial Day weekend for us all
I
to
did.
survive.
I like it.
I mean, I threw on some cash flow trades on Friday, 3 days of, an extra day of not having to trade. And then you come in on a Tuesday, it's dojiing, nothing much is happening. What more can you ask for?
And let's throw a party. We all have.
And then you guys give me more cash flow trades. So what more can I ask for?
I love it. I love it.
Hey, good start to the week, guys. 4-day week, right?
Fantastic.
Yeah.
I love it, Gino.
Not bad at all.
Great idea there on Trox. Not exactly where I did not know where you were going to go with that one.
Well, I was looking at fundamentals of that whole industry, and that was like hard to believe, but
Yeah.
I can see it with these rare minerals and stuff, and I'm just trying to decide, Tim, is this an investment or a trade?
That's the discussion, right? I mean, because there could be a discussion there. All right, back on the S&P. Let's start moving into final thoughts here. Wrap up our show on a Tuesday. By the way, if you're out there and you're still watching the show, thank you for being here. As always, appreciate you guys. Whenever we come in, start the show on any given day. I love just seeing the chat and the conversation between the students out there. So appreciate you guys as always. If you've not done it yet, give me that thumbs up. Let's get the analytics out there. And if you're still brand new, not done it yet, subscribe, click the bell, join us each day. Emily, you get to go first. Final thoughts for the team out there.
Final thoughts is, Mark and Gino alluded to this at the beginning of the show. We're coming back from a 3-day holiday. Today's your first day of kind of getting back in the groove. So look for those setup. You got an easy day to actually sit down and prep and prepare. Not a lot of stuff has broken out other than, maybe a couple of things in financial and energy, but there's still a lot of stocks and a lot of, trades too that can play out this week. So spend the time to do so if you didn't get to do it over the holiday, and start, prepping for the week. But I absolutely love where the market is on this little doji. It gives you enough time to go out and look for candidates.
Fantastic. Mark?
Listen, I talked about most of what I had to do. I'm just going to talk about, we got a lot of programming heading at you today. I'm going to release a podcast in which going to be the rare central focus of the podcast. And I'm going to present 7 tips or things I've learned with cash flow trading. You hear people like Emily and I talk about cash flow all the time. I'm going to talk about some of the big lessons I've learned, titling it the 7, things I've learned, or tips, however you want to do it. And then Coach's Show tonight, Tyler Craig. I'll be interviewing Tyler Craig. Had Greg on the last couple of weeks. I'll have Gino on a week or two from now. Other coaches, Matt as well. And going to interview Tyler from a mind of a trader standpoint, mind of an investor standpoint, on his process for long-term investing. That will be
Fantastic.
for pro members tonight at 8:30 Eastern.
Looking forward to the conversation on the podcast with you, Mark. You are one of the best cash flow traders I've ever met from a mindset execution perspective. I think it's your wheelhouse. There's no question about it. So we're going to be talking there on the podcast. And then those fundamental conversations you guys been having on the show, coach's show recently, I love them. I love. See, here at Tackle Trading, guys, on a daily basis, we're trading the markets, we're managing investments, we're managing trades, but we are truly not just traders. We are investors. We are both. Those two things have to be understood and appreciated. And cash flow from an investment perspective, reinvesting those gains, reinvesting your cash flow returns, having you grow an account over time, markets, and a wonderful approach to trading and investing, in my opinion. All right, Gino, last thought from you, sir.
Yeah, keep it on the same theme. I love sector analysis. That's what I do because I follow the leaders in each sector. So one of my watch lists that's proven time and time has been my fundamental best favorites, my top fundamental value stocks of each sector. So when a sector is doing good, I go, okay, who's the best fundamentals that sector? And then I invest or trade those. Those are my cash flow guys, my good fundamental ones. Less chance of them going bankrupt, right? And believe it or not, they turn into momentum plays a lot of times because they get picked up by the big money. For as a trader, swing trade, short-term trade, I'll do the growth stocks and the stocks with not so good fundamentals, because I definitely have stop losses in those quick trades. But yeah, focus on the sectors that are in favor, like we talked about, and find your favorites of each sector. That's always a great way to make your life easier because, a lot of people here, have 9 to 5, you're busy. If you can whittle your watch list down to where you keep an eye on just a handful, it really makes a difference when you have confidence in your picks and you know a little bit about them, and it helps you decide if you want to be an investor or a trader. So fundamentals are very important.
Yeah, I agree. Team Tackle out there, thanks as always. Appreciate you guys being here. We are done for Tuesday. We'll be back tomorrow, same time, same station. Have a wonderful rest of your Tuesday here in first trading day of the week. We're out.